Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short-Term Trading Live with Oscar's weekend webinar. And what a week we've had. Downside, downside, downside in the indices, as you've seen. Luckily, we were right on that. We were looking for the downside. In last week's video, the weekend webinar, just about 7 days ago, the weekend webinar's date was the 30th, 12/30/07. We talked about the apex. The apex, the time in the market where a chart brings you to a point and it trades inside of that point, and then it's about to do something. Most times you don't know exactly what it's going to do, whether it be up or down, but you do know that around the 70% mark, and that's just at a visual look, not a pure calculation, but at about the 70% mark, the distance from the beginning to the actual apex is when you will find the market will break out. I had a series of charts that I posted for you. All of these charts were in the middle of an apex, well, at about the 70% level of an apex, and I said, wow, with all the technical indicators pointing towards the downside and all the bad economic news that we've had for 2007, the likelihood is we will break the downside of these apexes. I have a bunch of charts I want to revisit with you in a few moments. They're the exact same charts that I showed you last week with the apexes, except for the difference on these is it shows what happened since the last video to this video. So I want you to see this for yourselves, traders. I've said this many, many times. Technical analysis is not all that difficult. You need to keep it simple. I have a chart right behind me that we'll zoom in on in a moment. That chart was sent to me by one of my OMNIACs. He was in my class for 1 day. He came to one of my webinars that I hold during the trading day when I lend my desktop out to my OMNIACs and my students, and they see the analysis. They can see me on video and hear me on microphone. And he brought back a chart to me, and I am so proud of him. Russell A, let's call you Russell A. Swamalove, better known on my site. You know who you are. Kudos to you, baby. Good job on that chart. Great job, great job. You have the promise of a very good student. Again, the apex is what we will focus on. Traders, stay tuned because throughout this year, in our videos, we will discuss risk management. Risk management is extremely important if you want to survive in this game. Risk management means where to place your stops, how to trail your stops, when to not trade, how to keep your emotions out, the proper mentality behind trading. All of that is encompassed in your risk management, and we will discuss that in detail as the months progress. Technical indicators, we will absolutely cover the technical indicators that were behind all these charts that were sitting at the apex getting ready to break. 98% of those were pointing towards a downside. We will cover technical indicators such as stochastics, commodity channel indexes, moving averages. We'll talk about Fibonacci retracements. We'll talk about a lot of real in-depth analysis, which we cover every day at our OMNI Trading Academy. It is a great place for you traders. I say this in every video, but don't sit alone. Don't trade alone. Do not sit by yourselves and try to get this right. Come on down to the OMNI Trading Academy. It's simply live with Oscar. www. Of course is the prefix. You go to Short-Term Trading Live with Oscar. You join our academy, and we will help you figure out how these and many other indicators and something like the apex can tell you almost exactly where a market should go. I'm not going to say will definitely go because there is no crystal ball and no one can say where it will definitely go. You know why? If anybody knew one day for certain where the market would settle, it'd be the last day they'd ever need to trade. They can sell the farm and know where it's going to settle, and and that's it for them. Nobody can do that, traders. That's why we have things like the OMNI Trading Academy, and that's why many of the technicians that are famous out there have spent their whole lives building these indicators, because they're trying to get something to give them focus on where the markets might go, with a bit more of the percentage being in their favor when they call that shot. So what we teach at the Academy every day is how to teach you to sharpen your skills, all the analysis we could possibly come up with to help us get our percentages to be a little higher when we trade. I would like now to bring you to these charts. Remember this, last week's webinar, we put up a bunch of charts. They were all at the apex. None of them for certain. No one really knew which way it was going to go. The OMNI and the OMNI Trading Academy said, no way, downside is where we're going. In fact, I was bold enough on Tuesday and Wednesday's video to say by Friday, S&P will trade the 1420s. We got down to 14, 18.5 traders. Go, OMNI, go. Now that, there's no magic behind that. That is purely technical analysis. And I will tell you this, as I've said many times and I've taught many of my classes, the fundamentals behind these moves always come out in the technical analysis first. Let's take a look at the charts, traders. Let's go look at this. Remember, I'll repeat it one more time. These are the same charts we did in last week's webinar. So go look at last week's weekend webinar and then revisit this one. Let's take a look at the charts, traders. I'll be right back to you. Okay, traders. Swamalove, that's your handle at my site. This is your homework. Very, very interesting. This gentleman spent one day in one of my classes and came back to me with homework. Look what he has done. He outlined the apex. He outlined the smaller apex, the one that we broke down, and he defined 1, 2, 3, 4 head and shoulders upright formations, and almost always head and shoulders in an upright formation gives you downside. Looking at his homework, formation of head and shoulders, drop. Another formation with the head and shoulders, drop. Another formation, head and shoulders, a drop. And then finally a fourth formation with the head and shoulders, and you've seen what we did this week. Very good homework, Swamalove. Russell, you know who you are. Good job. Very, very interesting. Keep on sending the homework. Keep coming to the Academy. You will learn how to do this. I promise you. Good job. Okay, traders, we are looking at the S&P cash. The symbol would be SPY on the OMNIAC trading platform. This is the apex that we discussed in last week's video. And look at what happened. We broke down very strong, straight down through the bottom of the apex. If you recall, there are two averages that converged right here. The market failed at those averages. It failed to break the upside of the apex, and that's when we made the call for the 1420s, and down the market went. Interestingly enough, the apex, if you continue looking at this chart, there is a larger apex. These two lines are going to come meet at a certain point. So we took out that apex as well. Look at that. We took out the shorter apex here, and then we took out the larger one, which goes from back here all the way to here. We took that out on Friday as well. Very, very strong movement with good volume. But the purpose of this video is to show you that, like the drawing that was on the board a moment ago, when you get to about the 70% mark of the distance of an apex, you make a trading decision. The market makes its decision, and down the market went. Let's look at all the same charts that we looked at last week and see what the end result was. Okay, traders, this is the SPH. Last chart was the cash. This is the S&P, the March contract, the pit traded contract. And you can see clearly defined the apex. Again, about the 70% area, and the breakdown takes place. Look at the smash down that we've enjoyed, that we witnessed right after we came out of the bottom of the apex. Traders, the apex is a fantastic tool to help you decipher where these markets will go next. Let's look. There's a lot of charts to cover here. Here's a chart of the E-mini S&P. You see the apex was even more defined here. And look at the size of the break. And where did it go? About 70% of the apex, and down she goes. Traders, you will see this chart after chart. Remember that technical analysis will tell you with a very high percentage where the market will go. I showed this to you last week. You see it right before your eyes this week. Again, there's no magic behind this. This is what I teach at my academy, and this is what I'd like to teach to you. Let's look at more charts here. Traders, we're looking at the Nasdaq cash market, right? An apex, just like we had drawn up last week. The breakdown takes place at about, what mark is that, guys? What percentage?
70%.
Yeah, they're listening back there. You go, guys. I got some good students right here in the studio. At about the 70% mark, the market will make a trading decision. The decision on this chart was the downside. Interestingly enough, if you want to take this apex all the way out to here, we broke that one as well. Nasdaq really has some momentum on the downside. We traded on Friday and the Nasdaq marched all the way down to the 1988 level. We were almost at 21 right around Christmas time. What a monster drop. Let's look at more charts, traders. Okay, traders, now we're looking at the E-mini Nasdaq. This is the one that we all trade every day. There are two apexes here. The original one we had drawn up in last week's video. And look at the SmackDown. You know, we watched wrestling last Friday night. It was SmackDown wrestling on Friday, right? Well, we smacked down the markets just the same. Look at the way these things come down. Technical analysis is a beautiful thing. Now we have a larger apex formed. And, of course, we've even taken that one out. Not quite at the exact 70-point mark, but very close to it. So, once again, the apex works just as we expected it to. There are more charts, traders. You will be convinced by the end of this video that this apex is something to surely keep your eyes on. All right, traders, now we're looking at the Dow Jones cash market. Look at the Dow Jones, how well defined this apex was, and look at the size of the break. 1, 2, 3 major breaks under that apex. And if you want to connect this apex down here, the larger one, another market with an apex within an apex, and both of those bottom angles were taken out. Amazingly, this market had tons of momentum on the downside. This is Dow Jones cash. That's a very famous market. We all know what that is, traders. Everybody's grandma's got stock in this one. And look at that coming down. I do not think the bottom is in yet. Will the market work higher first? Well, you know what, traders? It very well could come up and test the apex again and then really give us a smackdown. But for now, the momentum's with the downside. Indicators are still bearish. Economic factors are bearish. Let's keep looking at the downside of the Dow Jones for now. Next chart. Okay, traders, another look at the Dow Jones Industrial. This is a little bit different chart, a little bit different look. And what I wanted to show you here was that the apex, we just got under it. The secondary apex, the first one, of course, we broke right down. We settled right here on this one, right there, just below the line. But another market that was much higher around Christmas time only a week ago, and look at the markets, the way it's come off since. Now you have a bottom here, just about a double bottom, but not quite. I don't think we're going to get the bounce starting Monday, but of course I'll have to do my analysis first. Let's look at the next chart. Let's see what else we have here for you, traders. We've got a few more charts to get through. Okay, traders, now we start to break apart the Dow into sectors, right? This is the Dow Jones Transportation Average. The transportation stocks, which make up the greater portion of the Dow. Look at this apex. And again, this is the same chart that you seen last week. Look at this, down, down, down. We went all the way down here to the 4260 area. What a smash down, considering we were at 49 10 days ago. Wow. Talk about momentum building on the downside. Now, if the separate sectors of the Dow are breaking and the Dow itself is breaking, that is telling you that there's a real story here for the downside. Let's look at more charts now. Traders, the next chart we're going to look at is the Dow futures, the one they trade in the pit and the one that we can trade electronically. Our symbol is NDJH8. The Dow Jones, the one that we can talk about during the day when we're clicking away on our electronic platforms. And look, the apex, we came out, hit that mark, and drop, drop, drop. I think I have you convinced at this point that apexes are absolutely a great formation to follow when you're trying to see where a market's going to go next. Do you guys in the background agree with me?
Yeah.
Is the apex something that's easy to find and something that's worth paying attention to?
Yes, on both things.
I happen to agree. That's how I made my calls this week. Let's look at more. We're going to go now and start to look at some international charts. Okay, traders, what we're looking at now is the Japanese Nikkei market, the Japanese stock market average. Again, another one of our charts from last week that had the apex. You can see that the market went to the top of the apex and fell just as the U.S. markets did. And down, down, down. We had the big break. And look what we did. Contract lows were set. We made lower lows than the previous by a lot, by a couple hundred points. The Nikkei is on its way down with the U.S. markets. The purpose of this, of course, though, is the apex. Keep that in mind, traders. It's a great lesson for you to learn. All right, traders, what we're looking at now is the London FTSE. Look at this one, traders. A massive, massive apex formed. The FTSE ran up, tested the top, came down, tested the bottom, ran up, failed another test at the top, and then broke and settled right here. Broke below the apex and will now likely continue lower. Another market, another international market, and look at that. Down through the apex we begin to go. And of course, there's a larger one here. Look at this one. These lines will come together and we'll take that one out most likely as well. But that is our first major support that we will find in the FTSE. So now the FTSE seems that the writing's on the wall. If you rally, you sell the rallies and expect this market to get somewhere near the 6,200 mark. Let's continue looking forward. Okay, traders, last but not least, we have the German DAX. This is equivalent to the FTSE and the Nikkei and the S&P index, but it's for Germany. Big difference here. Not the apex that we've had in every other market. Something completely different. And this was the last chart I showed you in last week's video. Inverted head and shoulders. An inverted head and shoulders is generally a bullish indication. Not only is it an inverted head and shoulders, there's an inverted head and shoulders within the inverted head and shoulders. That is generally bullish, traders. If you go and check, you will find that a head and shoulders that looks like this is generally bearish. And the head and shoulders that looks like this is generally bullish. So what's happening here? That technically the markets are telling me that money will end up running towards the German stock market and out of the FTSE and out of the Nikkei and out of the S&P. We are short-term traders, so I don't want to project this out for a long period of time. I just want to show you what this means technically. And technically you will find that an inverted head and shoulders is a bullish signal. Let's see what the DAX has to offer. Okay, traders, so you've seen the charts. You see that technical analysis does work and is not all that complicated. Literally, if you can spot it with the naked eye and then go to your indicators and break down what should happen, the likelihood is that it will. Of course, you need to read the fundamental news. I'm not a person that's blind to fundamentals. I'm a person that says, what's coming out in these charts? I see a fundamental coming out in the charts. Then I do my homework on the charts. I get my opinion, and then I read the fundamental news to see what might be out there lurking in the background, creating these formations that has given me the signal. Again, traders, I know that these formations, although I call them easy, that it's not the easiest thing for you to find. You will learn that if you hang around with me at the OMNI Trading Academy. We will certainly cover these indicators in great detail at the site, at the Academy, and certainly in these videos as time passes throughout the year. So I thank you so much for showing up and tuning into my videos. I know that about 2,000 viewers watched last week's video, so that's why I thought, hey, you know what? A lot of people tuned into last week's video. Let me show them what the end results were, just to help you realize that, yes, the analysis works, and it doesn't take a genius to do so, because Lord knows I'm no genius here. I'm just a guy with an ear for charts, and I know how to trade the markets when it's time to go. What we teach here mostly is market timing, and these indicators, along with something like the apex and the infamous head and shoulders formation I've shown you so many times. You have the upright, you have the inverted, both of which will give you very, very solid market direction if you know how to use it in conjunction with your other indicators. So traders, I hope this helps you. I just love to put these videos together because the response I get from my Omniacs, I'm helping so many people learn this. And you know what? It's a great feeling to know that I'm helping you become a little bit more financially independent by getting sharper with your trading skills. I've heard enough horror stories, and that's why I do these videos. So to you, my fans, my traders, thank you so much. I will be here every day to help you get better at this craft. All right, traders, I've had a long week. I'm sure everybody who's been with me had a long week. It was a short week, but it was a long week when it comes to trading, because boy, did we have a lot to do. Come on down to my site. You know the homework I showed you before? I got a lot of homework this week. Everybody who wrote me homework, it'll all be answered by Sunday evening, so check your email inboxes. Please continue to send me emails and send your homework to oscar@futuresanalysts.com. I will evaluate it and send you back a message, a reply on what I think of your analysis, whether it's right, wrong, or indifferent. You will hear from me. Traders who are following this video for possibly the first time and you don't know how you downloaded it or stumbled upon it by accident because you found it somewhere on the web, come to our YouTube spot where we have 252 videos. I was almost going to point to you and trip you up on that one.
I'll give you a pre-move.
We have 252 videos, a lot like this one, with great techniques in there to help you learn. You can get to them by going to www.youtube.com/futures analysts. When you go there, subscribe to the videos on YouTube so that YouTube will notify you every time you log on if I put out a new video, and you can just about count on one almost every day. But make sure you subscribe. Our subscriber list at YouTube has grown tremendously, and we like to communicate with you through that avenue as well. You can also leave comments on the videos at YouTube, so make sure you go there, subscribe to the YouTube videos. Traders, always do your own homework. If you followed what I had to say in last week's weekend webinar with those apexes and did your own homework, you caught almost 50 points on the downside in the S&P from the highs to the lows. We were up in the 70s. We went down into the teens. Wow. Big, big drop. Even greater than that was the drop in the Nasdaq, and that was all telegraphed in the charts in the technical analysis. Traders, I am a broker. If you'd like for me to be your personal mentor and trading coach, come on down to my site. Click that wacky picture of me standing in between the gold and silver bars on my homepage and fill out the forms to open up a trading account with me. That gets you into my premium trading room. If you don't know what that is, I have 2 rooms I run throughout the day. One of them is the open trade talk room. Second one is the premium trading room. If you have an account with me or you join the premium trading room, you are in a room where there are cameras and a microphone fixed on me all day long. And if a trade is about to take place, I grab the microphone, I speak right into the microphone and say, traders, move right now, get in, get out, move your stops, whatever it may be. I say that, you get the information in a split second. The other OMNIX that follow me, I have to type it onto my site, hit enter, and then the emails go out, and that's how they get their info. So the premium room is a great place for you to come and get the information firsthand as quick as it can go out. Also, if you open up an account and you get in my premium room, you're also invited into my gold classroom every day. And that's when I take apart the charts like the ones I showed you in the background a few moments ago. And I teach people how to use the charts, how to use the analysis, and how to keep their emotions out of trading. We do that every single day at the site. So come to the site, get yourself a gold class membership, and come join us. If you open an account, you're a VIP member, you're in the premium room, and that's a great place to be. All right, traders, again, I'll repeat it. Do your own homework. Don't listen to anybody, even a nut like me. Listen to yourselves. Do your own homework. Check it against my work before you even think about whether I'm right or wrong. Make sure you know whether you think you're right or wrong. All right, traders, I think I'm done. Gentlemen, have I missed anything today?
Did you tell them not to trade alone?
Oh, yes, traders, please do not trade alone. I may have mentioned that earlier. If I did not, don't trade alone, traders. Come on down to our site. We have an ever-growing army of OMNIACs, thousands strong at this point, from all over the globe, and we all interact all day long, every day, even in the evenings. We have a European room that's open all night long for the European traders, for traders around the globe. So come on down to the rooms. Don't trade alone. It's very intimidating to sit by yourselves in your office, in your closet, in your bathroom, wherever it is that you trade from, I don't know. But if you're alone, don't do it. There's strength in unity. There's strength in numbers. Come on down to our site and join the numbers with us, and let us help you get through the day. Okay, traders, I'm about to run out of here, but remember this. Remember to say this to yourselves every day, every morning, every afternoon, every evening. Say it when you place your orders. Say it when you place your stops. And place your stops first, traders. You know who I'm talking to out there. Make sure you place your stops first. And say this to help you with your emotions. And you know what that is. Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.